Hey guys, Sam again. Hey, just a quick update here on a trade that we were looking at yesterday. So this is Decred against the dollar, and let's just evaluate here because there's good teachable moment here. Okay, so yesterday we had this identified. We had this bullish move here, this impulsive move here that broke down nicely. We had fib pulls here. We had a good target for the third wave, and we were trading on the potential that we had a wave one high here. I'm going to mark that wave one. We had that high, and that we had a retracement, and we were going to hold above the wave one. Okay, and we were, for our fib pull, we were working off this low here. Do you see it? See, we had the 618 and the 1 line up perfectly. So we had the entry here just at the 618. Yeah, I can't quite see. Yeah, 33 and a half, 33.50, and then we had our stop on the other side. Okay, so that gets stopped out. So we get a more complex correction in this fourth wave, if it is a fourth wave. Right now it looks like it still might be. So we have to make a change. Well, it overlaps the 1. So what does that mean? Well, can this be a leading diagonal? Well, it can, because we've had an ABC. So we know a leading diagonal only found in the first wave or an A wave or the first wave of an A wave. So this still plays, but we have to change it a little bit. So if we are trading off of a leading diagonal, our target moves down a little bit. So the most likely target is the 618 for the wave of the entire move from the low of the entire move up to the 3 high projected from the 4. So our target now is up here in this little window here. We got a nice little target up here of the 618 of the entire move of the alternate price projection, and then we're still looking at a negative 23 of this same entire move down to the retracement. And what can we learn from this? So if you take a look at this, okay, acknowledging that we've already taken a stop, does the trade still make sense? Is there still a trade here? Well, let me take this off so I can blow this up and show it to you a little bit. So if we've got an ABC, we know the most common relationship for an ABC is to be 100%. So the length of A here, projected from what we are labeling as a B, would be 100%. And we get just a few ticks above it. And we happen to, coincidentally, run right into the 200 period moving average. Okay, now, that gives me confidence that this count is still valid, and that all that's happened is that we've converted this ABC into a low here. This makes perfect sense from an Elliott context, because that's a very strong low for a correction. And then I want to look at the entire move from the low here to the 1 high, and look at this overlap here. We get the 50 and the 100% within a couple of ticks of each other, and then we put the channel on it from low to, if this is our low, we put our 3 high here, and then look at our target up here. Now we increase it a little bit. So from this 50 to this negative 23, that puts us up at 46 and a quarter. The negative 618, we might take a partial there, or at least tighten stops, because we know that's a common fib relationship for the fifth relative to a leading diagonal, given the overlap of wave 1. So is there still a trade there? Well, I'm already in it. I just posted this up on TradingView. Okay, so where's the trade? So if we're going to go up, let's split the difference. So stop can remain very close. So there's 10.5 to 1. If we get the 23, that's 11.5 to 1. So, my point is, you got to be able to quickly reevaluate and say, do I still have a trade here? So, okay, I took a small loser, right? That's just part of trading. Get used to it, accept it. You absorb it and then reevaluate. Do I still have a count here that works? Can I still see a bullish case? Do I have Elliott context here that is valid? Do I have a trade still? And was I just too soon on this? Well, that's the premise that I would propose to you here. Not too late to get into this right now. This structure here gives me good confidence here. I'm more than willing to take that trade and look at a very, very, very tight stop. For an 11.5 to 1, I'll take that every day. every day. Now, if we get stopped out again, maybe we pause a little bit and see, are we going to go down to the 618? It breaks this nice structure here that we have. Breaks the structure. But that 50 is enough of a signal to really take a close look at it. With that good structure, hey, there's a trade there all day long. Okay, so get it if you can. It's not too late to catch it. That stop would, you might tighten up a little bit, give a little bit more. Now you're still 7 to 1. Okay, go get some.